They've sold about 65,000 units in the last quarter. They've seen about 52,000 vehicles being sold in the last quarter. They've sold about 15 lakh vehicles, over 26 crores of state incentive. In 5 years, EVs have gone from almost nothing to 8% of total two-wheeler sales. This makes India the world's second largest market for electric scooters and bikes. But the last few months have also shown that this scale alone isn't enough. There have been supply shocks from China, there have been policy changes such as the GST at home. There's also a growing base of legacy players that are entering the EV two-wheeler market, and that is actually shaping how and who is going to win in terms of market share. So today we're going to look at the two-wheeler market in India. We're going to look at specifically the EV sector here. And it's important because there's hundreds of millions of people that use two-wheelers for traveling, for commute. It's also a proxy for how well rural India is doing financially. So it makes perfect sense for us to see how India is transitioning to EV from the old ways. So first, we'll look at the EV market in total. We'll look at 4 players. We'll look at 2 startups and 2 legacy players. Over the last quarter, what we've seen is that a lot of the legacy players are not just building and gaining a lot of market share. They also have the scale in terms of distribution and the networks that are already there, along with the cash and the distribution models to be able to compete against the likes of Ather and Ola, who don't necessarily have that sort of moat historically. So first we'll look at Ather, which has been going really fast. They have built and improved on the unit economics, as you can see in the graph, but it still doesn't have the level of profitability or the cushion that is needed similar to the legacy giants to be able to compete with them. In terms of broad numbers, what we're looking at is they've sold about 65,000 units in the last quarter, which has been up about 67% on a year-on-year basis. They've got strong revenues of nearly 950 crores. Market share has increased from 12% to about 17% now. Overall, it is still loss-making, but we've seen EBITDA margin improvements from around minus 21% to about minus 10%, which means they're burning less cash per scooter than they were before. Next, we'll look at Ola. This used to be one of the shining lights of the EV space, but it has lost market share. What has happened is it's faced many issues, from supply side issues, after sales issues, customer care issues, which have resulted in not just market share loss, but potentially a wider reputational loss as well for the business. In terms of numbers, we've seen about 52,000 vehicles being sold in the last quarter, which is almost half of what they sold over a year ago. And for the first time, they've reported a slightly positive EBITDA here of about 0.3%, likely driven by the aggressive cost cuts that have happened within the business rather than the booming sales or the revenue growth that is happening. So now let's look at TVS, one of the largest manufacturers of two-wheelers in the Indian market. EVs is obviously a very small component for the TVS business, but it has become a significant market leader when you look at the quarterly numbers and the annual numbers. Last quarter was one of its best ever performers from an EV perspective and for the company as a whole. It has generated a record operating revenue of roughly 11,000 crores and a profit before tax of around 1,200 crores. Overall, they've sold about 15 lakh vehicles across several categories, out of which they sold about 80,000 EV scooters, which is made up of around 5% of the overall volume of their business. Given the size and the volume of TVS, that 5% is a very small chunk of the business, but that 5% is larger than the entire quarterly volume of either Ola or Ather. So it has become a significant player in the market in a short time. Finally, Bajaj's EV brand has been ramping up with the Chetak, and it sits on top of its very profitable cash cow business, which is the two-wheeler space as well. EVs is one of its fastest growing categories. They've sold roughly around 12.94 lakh vehicles in the quarter overall, and EVs comprises of a significant portion of that as well. EBITDA margins have hit around 20% and revenues touched upwards of 14,900 crores, both of which have been at an all-time high for the business. So now that we understand the overall market, let's sort of shift towards understanding what is happening from a supply side shock perspective for the overall business for all the EV makers that are there in India. China's tightened exports of rare earth magnets, which is a very critical component when it comes to development and manufacturing EV motors, because of how powerful they are, they're compact, and they're heat resistant. With China dominating this side of the supply chain, Indian manufacturers have suddenly felt an impact here, and there is obviously a strong dependence on foreign players at this point. When we look at individual players, for instance, Ola has moved the way that it's designing its components to move away from rare earth magnets, and they've moved to a ferrite magnet. So Ola has gone back to an older model, which is typically cheaper. It's iron-based magnets, which are typically heavier and weaker. Ola claims that by optimizing the motor's magnetic circuit and design, they can match the performance that we see in the newer rare earth motors that are there in the market. If this holds up in the real world conditions, where specifically in India where there's a lot of heat, there are heavy loads, roads aren't necessarily the best, there's a lot of issues in terms of driving, maneuverability as well, then this could be a significant breakthrough, and we could see other players shifting to a ferrite magnet as well. But that's a big if. There are obviously trade-offs in terms of efficiency. We spoke about how it's a heavier unit, so hence the weight of the vehicle also goes up. There's also issues with durability and whether this can last from a longer term perspective, and that is something we'll only know once this hits the ground running over a longer period of time. Ather has gone the more conservative route. It has shifted away from the heavy rare earth elements that are typically used and are currently under China's control, as they are one of the largest manufacturers of these products, and have moved to lighter rare earth compositions where the supply is a little less constrained. This cuts the supply risk for Ather, but it could also reduce the efficiency that we see at higher temperatures for these EV two-wheelers that Ather is making. And that is a serious consideration, specifically when you look at the Indian summers where the heat obviously reaches a very high point. Ather itself calls this a stopgap measure. It is working on a longer term solution, and it has already had to defer over 26 crores of state incentives due to the supply chain issues that they've been seeing. Bajaj has openly said that the shortage of magnets has hurt its EV business, specifically the Chetak lineup, though it has also eventually recovered much earlier than expected. TVS hasn't gone into the necessary technical details, but has acknowledged that the industry would have grown much larger if the magnets, the rare earth magnets, were more freely available and that constraint in supply wasn't there. Overall, from an effect perspective, if you look at of the supply chain shock, companies that are able to redesign their technology, diversify their suppliers, and are able to absorb the shocks have a potential structural edge over those that can't. Another interesting point that shapes the industry is obviously the policy that the government comes up with, and that has been happening very slowly this year as well. So under the production linked incentive scheme, the PLI scheme, advanced automotive and EV companies that can meet the tough investment and localization criteria get up to 13 to about 18% of the overall EV sales back as cash incentives. So when we look at Bajaj Auto, for instance, it has been a major winner. They have about 13 PLI applications that have been approved and could claim roughly upwards of 600 crores as incentives this year from the government, which is one of the highest among all automakers, including four-wheelers as well. And this would obviously have a direct impact on their bottom line and on the margin that we're looking at. Ola Electric, they have won PLI certification for its latest Gen 3 scooter lineup, which is through 2028, and has obviously filed claims worth about 380 crores on the current and last year's FY sales that have happened, but the benefits haven't necessarily fully flown to margins yet and may show up later in the year. TVS has also begun PLI benefits after completing all the compliance audits and may claim upwards of 300 crores for FY25, which is about 0.5% in terms of contribution to its margins. The outlier here has been Ather. Despite being India's second largest EV two-wheeler manufacturer, it doesn't qualify for PLI. That has forced it to delay product launches and puts it at a very clear cost disadvantage when we look at its peers who are effectively getting a state-funded margin boost to their balance sheets. Finally, there's a third point that we should note here, which is that most of the EV scooters that are available today and the owners that are there of them typically plug in at home. They charge it overnight on a regular 15 amperes socket. And that works very well when you look at it from a personal capacity use. But when you want to scale up and you want to go to commercials, you want to go to riders, you want to go for delivery fleets who may need to charge at various locations at odd times, etc., that model doesn't work. The problem here is that many of these companies have built their own proprietary fast charging networks, and these networks don't necessarily communicate or interact with one another, which means that one brand's charging point may not necessarily work with another company's EV model. So until there is more standardization, every company has essentially built its own mini ecosystem which means there is a limiting of the overall available density of chargers from a consumer perspective. There is also the concept of battery swapping that has come in, which is a potential alternative. However, by swapping a drained battery for a charged one, that also needs a lot of standardization. Each company currently has its own battery, own size, own sort of specifications in terms of designs and connectors, etc. So there's a lot of issues in terms of the infrastructure that's available two-wheeler EVs right now, which is hampering the overall growth of the market. There's also services. Now, services is a very strong mode specifically for larger legacy players, and it is a very strong differentiator. Building a reliable service backbone from scratch is obviously hard for new entrants, specifically startups. Ola has huge backlogs from an after sales perspective due to this shortage of not just parts but also technicians and service centers across India. Legacy players don't sort of have these issues. TVS and Bajaj have decades old business. They have decades old dealers and service centers across the country that can be adapted very quickly for EV as well. And this coverage would take a young startup many years and a lot of capital allocation to replicate. So what does the next phase of growth look like for the Indian electric scooter race? Well, the last quarter, including the October month as well that followed, proves one thing very clearly. Indian EV two-wheeler market is growing very fast. It has enough customer demand to hold its own even when there are policy and supply chain shocks that are being thrown at it. But the overall competition is changing. One, there is a shift towards profitability and scale as opposed to growing at any cost. We're seeing TVS and Bajaj don't need to be a brand that is only EV. Being cash rich from its existing business help them build that advantage into the EV business as well. Supply chains are important. Companies that are depending and designing based on the components that are available as opposed to localizing some of the components, hedging geopolitical risks, will obviously be more resilient than those that are simply chasing, volumes. There is also obviously policy which has a big impact. Companies like Ather have missed out on APLI schemes and the benefits that are there, which can impact their competitiveness, the growth that they're seeing as well. And finally, infrastructure. That's a very important point because it helps if standardization happens, that helps the overall industry. It ensures from a consumer perspective there are multiple charging points, there are deep service networks available, and that helps the overall ecosystem grow. So the true winners here will be those that combine this technology with the old-fashioned business, which is of discipline by building robust supply chains, strong margins, a very strong dealer and service network, and ultimately the ability to sort of navigate policy frameworks, and not just the ones that are just the loudest marketing or the most futuristic designs. Let us know what you think about India's two-wheeler EV market's growth and where you think it's going to go in the next few years, and who you think will be the top player in that sort of coming period in the comments below. Do like, share and subscribe if you enjoy this video. Thank you and happy investing.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.